You can see my screen share, yeah?
Yes, yes.
Cool. Okay, great. Just like I said before, nothing too major today. What I'm going over here, it's not like I'm trying to do anything fantastic. I'm just literally doing market analysis, or if people have questions that they want to ask me. One of the biggest questions that was asked, which was in my Discord group today, and this gentleman here did ask me, have you ever considered live trading sessions, basically before pre-London Open, and going over, part of the strategy or what I would look for in terms of a trade setup, even if it's down to my psychology or whatever it might be, or understanding of the market. So I have done something like this before. I did do it in a paid VIP group. So what I'm telling traders now is that a lot of them, if you want to get into this group here, which is the Red Pills group, this is the VIP group where I do chat a lot. I put a lot of information in here about whatever I might be looking at in terms of trades. There's also the neo trading area as well, where now what I'm actually giving out is all supply and demand areas based on a custom indicator that I actually have. And I'm literally just putting them out there for people to be able to catch. Like this one here was a fantastic one on US 30 that I actually saw yesterday. So when I gave this out to everybody, price was above here. And then what actually happened is you can see price spiked down exactly to this level, to the T. So if you was actually watching it as something you trade, I know a lot of people only trade singular pairs in here, even though I trade a lot of people trade singular pairs. Yeah, you could have been watching this, and as soon as it got there, you could have just entered straight away with a bounce. A bounce of price action. You have to be careful, people. Your microphone will be open and we'll hear all of your private information. And this is being recorded. So if you don't want your private information going out, be careful. Cool. So yeah, this is basically what I'm putting in the neo trading area at the moment for people. And I'm updating this every day or every other day, of course, because price action has to take some time to move towards these levels. Another thing as well for people so they can understand, I have put it out there, but when we go into the VIP service, this is actually what's happening at the moment. So we've got Trinity alerts here, which shows you break of structures in the market on every single time frame. There is a lot of them that appear in here, but again, people trade singular, so you can just wait for your pair to appear within the day. All you have to do is literally have a quick glance over to see if your pairs appeared. So now it's what, 1:21 in the UK. You can see here at 1 o'clock, basically, these are all the alerts that came through, and that's it. If it's not the pair I'm trading, I go away. Some people, I think that what they do is they overwhelm themselves with these alerts, and they're, I get there's a lot that come through, but you just basically have to have a quick glance. If it's not the pairs you're trading, pay no attention to it. What I have actually worked on as a day trading strategy for people is I've done these ones here now. So Trinity Morpheus is going to be based on only pairs that are trending in a longer term trend. So therefore, it will be easier to catch trades. And I actually do give out. So you can't even see this Telegram thing, can you? I just realized I'm all talking and I'm like, hold on a second. You can't even see this. What is going on with this? Okay, let's go share. There. Can you see this now? Hello, anyone? Can you see it now? If you can, anyway, I'll go back to this. So, yeah, just give me a second. So here, so yeah, basically, what you've actually got here is the Trinity alerts. And like I said before, this is where you just have a quick glance at this setup here, just to see if you're trading one of your pairs. So if something came up, like you can see US 30 did come up here for a retest of a sell. So it is buying up, but it's telling you that it's touched an area that has sold before and an area that, had formed an alert basically on before. So it was a retest of a sell. So it's up to the traders if they do want to sell price from that level. And that's what's very important. You have to pay attention to what's happening on price action and what you're looking at. When I go back to the charts, you'll see what I mean. So again, you just have to have a quick glance at this. If your pair that you're trading is not there, then you don't have to pay attention to that. Again, what I've done is a fantastic thing for the people in the VIP services. I've basically created an Excel sheet, and anything that I see that is in a constant trend, whether it's buying or selling, I would put specifically those pairs. So you only get alerts on those pairs basically here. When you're getting alerts on those pairs, what's actually happening for you is that, you can just literally wait for those entries. I've based it more on the 30-minute entries as well, because therefore you're not going to get as many alerts basically on that said pair that you're looking at taking from the Excel sheet. at the time, and you can get some great entries in this as long as the market respects structure. We're in a very fundamental market at the moment, so the market's not respecting structure a lot. So of course you're going to have more losses than wins over a period of time, or you're going to get very big wins because you're extremely lucky, because the fundamentals obviously goes in your favor. Then we've got the signal chats that's here as well for everyone. So we have had a few losses in the signals at the moment, very transparent. I'm not going to say we've just been, fantastically winning trades, but we have had huge wins. This was me showing a week where I traded my live prop firm account, one of them. And here you can see how many losses I had taken. But again, at the end of it, I was still profitable by 3.5% at the end of it, because again, I just followed my plan. So we're not going to win every single trade in the signals, and people need to understand that. It's not going to go on like that for you. So yeah, that's pretty much it. And then you still got the Neo group here, which is basically my swing trades. They don't appear every single day, but when they do appear, you have great trades in them when they do appear, which is fantastic. So I'm just trying to think of anything else. And then, yeah, you just get the Morpheus Excel sheet update in here. So when you're added to the Gmail account of the Morpheus Excel sheet on the trending pairs, you can just click on the spreadsheet and then you'll be able to see the pairs that's trended. Yeah, no problem at all. No problem at all. I understand. That's what it is. I understand. So yeah, so that's basically that there. Let's go back over into here. Let's go back over into the chart. Okay. Let me just go into here and then just see if anyone's still about. Okay. And yeah, so now we can just go into the charts anyway. Let's start off with gold. Just thought I'll put that out there for people. So to get into any of those services, it's just a one-time payment of $25. That will be going up soon as well. It's going up very soon. So it's going to be increasing to $35 very, very soon. So I want people to understand that as well. I'm going to be putting that out in a lot of my YouTube videos that will be going up, because I've gone around the board and I've checked a lot of the services of what people are offering in this Forex community. And there is pretty much nobody offering you that price on a one-time fee. If you're looking at one-time fees, you're looking at hundreds of dollars basically, because obviously it's a one-time fee. So you got to get it while it's hot, man. That's the best I can say. So now let's go into some market analysis here, because I know this is what the people are here for. So right now we can see that gold is obviously still pushing down, and this is the major level I've kept telling every single person about, 1680. So we have to pay very close attention to what's happening at 1680. We did have this fake breakout and a pull back towards this area. Then it did struggle. So when it came to, let me use this one here, it's a bit smaller. When we did come to CPI news, we can see CPI news did not even break this level over here. It actually stayed within this level, and we saw a massive shoot all the way back down. So again, it's just proving how powerful this 1680 level is, which I've been speaking about for months now. If you've been in my Discord group and in any of the YouTube videos that I have explained on what gold could be doing next. So a lot of people are asking me, what do they think gold is doing? Right now, it's doing a liquidity fill of this wick here, as we can see prices selling back down. So on the daily time frame, there was a wick left behind from the spike down and the spike up. It did. Whenever you see a V-shaped pattern in the market, so if the market does this in one day, then there's a wick that's been left behind on the daily time frame, 4-hour time frame, etc. And what tends to happen, as I always explain, is price goes down to go and cover that the next day. Doesn't always have to do that. Sometimes they will go somewhere else first, but there is a chance, if you see market structure heading towards that direction, they're going to cover that liquidity. And this is what you're seeing here at the moment. It's basically slippage in the market. So yeah, and just so it's like a gem for everyone. Once you see that on a daily, if you see that in one day, then there's a wick left on the daily time frame. If you see the same thing, not remove joins, let's do it like this. If you see this in a week, yeah, let's just do it like this. So if you see a pattern like this in a week, yeah, like that, then that means that there's a wick left behind on the weekly time frame. If you see the same pattern in a month, so in the middle of the month or at some period in the month, they do this, basically they just reverse price in like a semicircle, then therefore you're going to see a wick on the monthly time frame and so on. So if it goes to lower time frames, it'll probably be like, if you see on a 4-hour chart do something like this, maybe within 2 4-hour candles, you'll see a wick on maybe the 15-minute time frame and so on. So it's just a way of just knowing that wicks are being formed. Whenever I see a massive impulsive move or a day looking like this, and I'll show you what I mean. To go to the 1 hour chart, look there, right here, you see? So when I see something like this, I already automatically know, because my trading experience, that this is a wick being left behind, either on a daily time frame, 4 hour time frame. So I just go through my time frames and check, what's going on. Right now, price is holding like a higher lower market structure here, we can see. So it is holding this level. But like I said, it's still in the middle of nowhere. There isn't really too much. I mean, what we can say we do have here is another type of, I would either say demand zone here. Really, you kind of have on price. So you have a demand zone here. Some people might say it's an order block, support, resistance, key level, whatever you want to call it. It's a level of interest. I'm playing a lot with some supply and demand at the moment. So let's just say this is a demand zone. You can clearly see price action has broken out of this level. And now we're finally seeing a retest to this level. When it did retest this level, we can see that there was a breakout here. So it might just respect this actual demand area and actually continue to buy. We just have to see what happens when it comes to price action. So thank you for the people in here at the moment. I know life is not always free for you, but we're going to see what we can find out here. So again, we are seeing news release and prices pushing down now. This is what I said, it's in no man's land. Me, for what I'm expecting gold to do after this, personally, I'm expecting for it to go back down to the levels that I was explaining here. If it closes this week below 1680, then what I have explained in previous markups here, where is it? Here, basically, I'm expecting it to go to these levels down here, which is 1573 and 1451. Basically, the wick that was left from COVID-19, COVID-19, is it? Yeah, COVID. Anyway, the wick that was left from COVID, that's what I'm expecting them to go back towards, because it's slippage in the market where they've had to push price immediately up to recover the economy and stuff like that. So yeah, I think they're going to go back towards that level there. And if you look on a monthly time frame, you'll see it. Again, if it closes below this level on the weekly, then we could be looking at more bearish sells to the downside. So we're looking at buys above 1680 and sells below 1680. So anybody that's here at the moment, do you have any pairs that you want me to check? Anything like that? So I've just gone over gold. I've gone over all the understanding of what gold can be doing. So now you just have to yeah, I'm just hearing as well that the KK from the from the UK government as well, he's been sacked basically from his position. Let's go check what the GBPs are doing. The GBP was absolutely ridiculous. So let's just check. Yeah, so this is what we was looking at, and price didn't even bounce back. So because of what the GBP has been doing from this recovery here to here, imagine all of this was so much money people had lost in the market, big time investors as well. And it's crazy because imagine the big time investors, what actually happened is they had most of their orders, even if we go to like GBP USD, they all kind of look the same. They've had most of their orders for buy continuations from this period up here. They could hold a bit of drawdown if they wanted to. But now what's happened is when this has happened, this has taken out a lot of people in the market and they've lost a lot of money. So by force, we're talking, billions and billions of pounds, basically. By force, what they've had to do is reverse the market and push it back up here because it just wasn't acceptable. So they were giving, I call him KK, they were giving him a deadline basically to get the economy back into shape in the GBP basically. And what's actually happened is I don't think he's hit the target basically. You can see the Bank of England are the people that came in and started pushing price action this heavy. So we can never ever push price this heavy basically. So it's not even institutions push price like, and when I'm talking about like big firms, only the banks can do this. So the banks have had to push price all the way back in here to recorrect it. That's what's actually happened at the moment. And actually, obviously they've taken out these highs here. I'm just trying to see, let's go to a daily time frame. See, yeah, so you can see where it's just been ridiculous, where it dropped all the way from here. So I believe they're trying to get it all the way back up to this level, which is the drop just before the announcement of the war on Ukraine. Basically, they're trying to bring it all the way back up here. That's what I'm trying to see. So yeah, a lot of people lost money. A lot of people lost money, big investors, and they were not happy. So yeah, he's been sacked, man. What are your thoughts on US oil? I don't really trade oil too much. I know a lot of people have a fascination of it, but I've never traded it, but I can go over it. I've never ever traded it before, ever, live. I know a lot of people love oil. I've drawn out all these levels here. Let's see. Let's just remove all of this, remove all of these drawings and get back into here. So the most basic thing I always do is I go to my daily time frame. I draw my Fibonacci like this. I can go to the daily, weekly, or monthly. It depends how price action is looking. I can see a clear swing high here. So I just go to my daily, swing high to swing low. We can see it touching the 50 on the daily chart. And then all we do is look for our key areas. So we can clearly see here, you know, that there's a key area here in the market. You'd ask me why I would say that is because we can see previously over here. Just so people see. Let me make my screen bigger. Yeah. We could see over here that the market had come down to this area before and had bought off this area, the 23.6 base. Sorry, the 23.6 it should be. It's come down to this area anyway, and it's bought off of this area and bought back up to this area and then sold back down. So if it was going to go towards anywhere now, if it is going to sell, then we're looking at this area being a key target area of buys from here. Also, we're looking at the fact that this would technically be like a left shoulder, a head, and then the right shoulder could form here for a continuation of a buy all the way up. So we'd be seeing price action doing something like this, basically. So if it wants to do that, if not, there we go. If not, then I'm trying to see what could we see here, this area. Now, I definitely think we're pushing down further on oil because it's already rejected from this area. So we'd have been looking at something different if it was buying already from here and still was buying. But right now, it looks like it's rejection area. And again, why I would say that is because we could see from this area here, if we just change this red, you'll see what I'm saying. Let's do it like this. Here. If we check here, what's actually happening here is there's a resistance here. And why I'm saying there's a resistance here, pay attention to wicks that form, especially when you're looking on the daily, weekly time frame and monthly. We can see that there's multiple rejections to this area over here. And this is what's happening again over here, multiple rejections, and we're already seeing a push down. Let's go to a weekly time frame and see if we can see a liquidity down there. So we can't see a liquidity, but this is obviously an imbalance in the market over here as well. So part of the reason why it can go down to this level. So from here to here, basically, right here is an imbalance in the market. And now they can come back down and clear most of this. And then the target buy back up level would be here. Let's go to the monthly time frame and see what we see. And again, no wicks really. So it's not too bad. It's not too bad. There's only a little bit of liquidity down here, but this is a solid monthly candle. So I don't think they'll push it back too much. I mean, when we go back to the daily, again, I feel like the perspective is still the same, that you're looking at them bringing price action down to this level here, which you can see the price action level right now. So you're looking at this level here. So this is your key area for a possible buy. I'm going to see if I can add oil to the alerts basically on Trinity if people trade it. You just got to let me know. And then, yeah, you can see right here. So, yep, that's what I'm looking at. Right now, we see a resistance here because we see multiple wick rejections here. Price is pulling down, holding this level again, this same level here on price action. And yeah, I would look for buys around this area here, basically. So you need to be selling it right now. If you're not in a sell already today, then you need to be selling it. And you had your entry right there. So you see, that's what you do. So when you go to your higher time frame, this is how you could scout better. And then when you pay attention to what's going on here, you can see that there is a M pattern that was formed here for your retest of this area for you to get in on the second leg of the M over here for your entry. If you break it down even better for you and you look at price action, you have a break of structure right over here. So your retest traders based on the higher time frame would have got in from here and the sell when it's as soon as price touched that level. Anybody that wants to be a bit more patient would have waited for price action to break this area here first, which was the last higher low formed from all of this. It smashed, broke structure here. So let me just do this so people can see. There's a break of structure there. And then they would have been looking to get in. So they would have been in from here. And how you would have taken this trade as well is literally like this. You put your stop loss above this level right here because it could retest there. And again, you was looking to take price action. It was a clean run as well, still is. You see how I've got my daily fib now. So where I've got my daily fib or anything higher, I've got at least a take profit level all the way down to here, which will give me a 3.33 RR. And if we're really looking at market structure on oil, you've got another level of structure down here. As you can see, price action brought up, created a higher low here. So really you could have a, let's say, a target of this level definitely take your partial profits, and then you've got more of a target down to this level here, which you could have taken. And that was a simple trade setup. You just have to be patient. So hopefully that explains oil for you and how you could have taken this sell trade continuation. Just give me a yes or no in the comments, please, or anything else that you need an explanation on oil. Kojo, where have you gone? Kojo. Kojo, you asked me for oil and you've gone ghost, man. What's going on? All right, cool. Anybody else got any other questions based on any pairs they want me to break down? Anything like that? Anything of the sort? Don't be shy, people. Don't be shy. We're here to learn. I know you got some questions. All right, cool. No one's gonna say anything then. I'll move on to another pair myself. Cool, cool, cool. So let's go over to US 30. So this is my other fib that I've got. People might ask me what's my fib settings if they're watching this. This is the fib settings for this one here. The reason why I've got this one is because it marks out the golden zone basically for me. So the golden zone is the key levels of reversals, resistance, breakouts, all of this type of stuff, all this good stuff. So this one marks it out like this, but when I want a clearer chart, pardon me, then I just go to my template here and then I've just got a clean fib I call there. So still got my golden zone marked out, but it's just got no background. And you can see obviously it's a lot more cleaner, less noise on the chart. And yeah, it's kind of doing what I did expect here. You can see I've already got this mark out. This mark out was from the Zoom call on Sunday that I give to the one-time fee VIP members. And right now we're just seeing price action going back up here. For price action to continue to go up on the Dow, we really wanted to break this area over here, basically. And this is where the resistance is. If it breaks this area over here, this break of structure here, then we've just got a bit of a cleaner move to the upside. So, you know, the impulse traders would get in here, but if you wait for this structure to break, then we're looking at price action holding this level. So people might say to me, oh, but why, John? Why? Again, I'll show you. And no matter what I'm teaching you here, nothing has to play exactly out. And when I say that, I mean like 100%. You got to understand that the market can do whatever it wants with fundamentals. But at the same time, as I look at fundamentals, I have to use the technicals to give me an eyeball view of what I'm actually looking at. And I'm going to break that down in a second for you. How can one master the act of trading psychology? I'm not going to lie to you. You're never going to master your psychology when it comes to trading because we're human beings. It's impossible. You will get better at understanding and disciplined. Yeah, you will become, because of course nobody likes to lose money. And when you've got money you're losing, you know, I'll say we're all adults basically. And if you're losing money in the market and you have to, you know, sort out your life, that is going to force you not to do silly decisions basically in the market, because you know you don't want to blow your money and then you can't pay your rent or whatever. So that's more or less what will happen to you over time. But for anybody to say master their psychology, I don't think it's ever going to happen to you in Forex, because you're always going to make a silly mistake at some point. You do something, let me just take this trade, let me just do that, somebody's annoyed me today, let me just enter anyway, let me just risk more. It's going to happen to you. I'm telling you, you're never not going to do it. So just, you might as well just understand that you will always do something at some point, but whatever you do at that time, just make sure obviously it's not as bad as, you know, blowing your whole account or something like that. And just understand, you know, more than anything, write down what caused that at the time, basically. Was it the fact that, you know, you was feeling annoyed that day? Was it the fact that maybe your boss shouted at you that day? Was it the fact that maybe you had an argument with your partner? Was it the fact that maybe unfortunately you lost a loved one? Like, what was it that made you take that trade that day that maybe was so bad on your record? And it's those type of things that make you better with trading over a period of time. Once you start realizing, and you'll get there. But you'll be fine. You just got to make sure you just keep going, and you'll see it to yourself. You'll see it within yourself. Sorry, you'll see it. And then you'll get better and better. Like I literally have a student now and he's gone through that. I don't know if he's in here, but he's gone through that process. And, you know, he's gone through the process of literally where you have a lot, you get a lot, and then you have to go dial back a couple of steps, because the market always humbles all of us at some point. And then for his psychology, he's had to start looking at it, the market, like, okay, literally he's gone back to even demo. When certain trades appear, if it doesn't fit all of his confluences, he will not enter that on his live accounts. He will enter that on a demo now, basically. Do you get it? So it's those types of things. You get better and better, and the market will just humble you. That's the best way for me to say it. Like, once you start seeing what the market can do to you, you'll realize that, okay, let me just chill, and your psychology will be better. So hopefully that answers your psychology question. So we can see over here that price action has bought huge from this level before. So we are seeing a break of structure over towards this level. So if the market breaks above this level, then we've got a better chance, and we can see multiple wick rejections here as well. Remember I told you, yeah, now we've got a better chance that the market can hold these levels and then continue to buy. So let's just say you saw something like this happen on the Dow next week. You see price going up here. Yeah, remember we've got a fib level here. And then even if you see wick rejections here, but then you could be seeing continuations up to this level, and then something like that, because you can start to see exactly what you saw here. So it might not, remember, it wants to break this level, but it might start doing wicks towards this level. Again, this is a better understanding for you here. So if I move this over here, this is the break of structure level, and look what happened. So you might see something like this. Look, it broke out, pulled back, but now you're seeing wick rejections to this level. So for all of my Trinity traders, this is how you start looking at your Trinity setups from here. Once you see maybe one rejection, you get in on a Trinity alert for the buy, or maybe you have to see one or two and then you get in. It's all about probabilities, but what you are aware of is that this level should be holding. Realistically, this level here should be holding, which is 299.47. And that's kind of how you just trade it like that, basically. So that's US 30. Anybody got any questions? That's US 30. Anybody got any questions? Let me know. Don't be shy. I'm going to keep saying it to you. If you're shy, you won't learn. And trust me, I had to ask questions to learn. Let's see what's going on in the Red Pills group. Okay, no problem at all. Let's cover here. Cool, cool, cool. All right then, yeah. So let's go over something else then. Let's go to DXY, because everyone likes checking DXY and what DXY is doing. So actually drew out all these lines the other day. These are all the structural points I saw. Let's remove this drawings. Start again. Again, you can see simple how I'm doing this. There is many swing highs and swing lows here. I understand that, but I'm just looking at the most visible one to me. And the most visible one to me is here. I can see there was pretty much a double bottom. So I can see that this was obviously a key level around here. So I'm just drawing mine from here to here, there. And that's why I've got mine straight away like that. Whether or not, you can always draw from different swing highs to swing lows. It doesn't matter really. There's always fibs within fibs in terms of time frames. And I can see this at the moment. So for me, DXY, how it's looking is, let's see. Let's break this down. So we can clearly see it's created a lower high on a daily time frame, which is a key sign of a downtrend is forming. Unless it breaks this lower high, then realistically we're literally going into a downtrend on the up chart. So that means that they are pushing the UX index, the US index down basically at the moment. Our level of structural break is over here. So it's not officially into a downtrend. How I would look at it and how I perceive it and how I explain to all the VIP students, I explain to them that you're expecting something like this, basically. So we want price action to break this level here. So this would be a break of structure area right over here. Very simplistic trading I'm doing, and I'm sure people will have 100 different things to say about it. How do you find an edge in the market? It's like hard to explain here when it comes to an edge, and I will answer that question. Let me just go over this first and I'll answer that question. But yeah, very simplistic way of how I look at the market and how to trade. You don't have to overcomplicate it. What happens most times in this is that what will happen is that it won't do this move. It will do something ridiculously, something else. And then people they get into this thing where they try to find a way of explaining what happened there. Most times when a move doesn't go your way, I would say probably even 8 to 9 out of 10 times, it's fundamentals. And what I mean by that is that fundamentals have come in and they've just ignored whatever technicals needed to take place. We can clearly see here there was a higher high formed here. We can clearly see there's a higher low formed over here. We can clearly see that from this higher high, a lower high has been formed. That is basic market structure telling us that there's a downtrend. This isn't a 15-minute chart, guys and girls. This is a daily time frame. So if it's formed a lower high, we are going down. We are going down. That's what it's telling us right now. And again, if they do respect structure, then they will come and break this level here. If they break this level here, then we're going into a major downtrend. But for them to do that, it's got to be a huge fundamental push, more than likely. And then you'll be looking at continuations to the downside, which one level's here, and then obviously eventually all the way down here. Now, I can't see them pushing it like this quick. We would have to have some crazy news, but you might be able to get a level or two. But for me, this break of structure level is quite far away. I'd prefer for it to be a bit closer in order for me to get it. And again, hold on a second. Can you explain the imbalance? I don't really trade imbalances too much, but I'll give you a simple explanation of what an imbalance is. Yeah, just to let you know, I trade more liquidity and wicks. I hope so. Yeah, cool. So I will give you a quick explanation. I won't give you like some mad theoretical explanation and all this type of stuff. I don't trade it. I'm not going to lie to you. I trade more liquidity and stuff like that. Let me go down to here. So what I mean by the break of structure on this area here, we just go over to the 4-hour chart. Yeah. Now this is better for you. So if you're watching, and this is how, once you're more of an advanced trader, you're able to do this, but I don't suggest beginners do this. So you need to be more advanced to understand what's going on here. Yeah. Beginners, keep it very simple. Like I just explained to you, wait for it to break structure here. Now, more advanced trader will go down to a time frame and say, okay, boom, let me go down to a 4-hour time frame, and then I could see there's a break of structure here. So I trade market structure. Very simple. Let's keep it very, very simple. I don't overcomplicate it, but I'm going to say this time and time again. Doesn't matter what I trade, trades are still going to lose. It just happens. Yeah, it's annoying. You get frustrated and whatever, but when they do respect these levels, you make huge winning trades. So again, we can see on a daily time frame, it has created a lower high. So now we're seeing a downtrend, and our whole aim is to be able to catch the momentum of the continuation of this downtrend. So you can see here, if it breaks this level, that's giving me an extra sign on the 4-hour that, hey, price is going down, and I could get my break and my retest on this level. So therefore I'm in before it breaks this level, and I've got a better, even better entry. So let's just say it goes down here and then it retests. I could get in here for a continuation of the pull all the way down there. Yeah. Or when it breaks out straight away, I could just get in and put my stop loss above this last high that was formed here, which I know is a key level on a daily time frame, so people can understand. So I can put my stop above here. Again, this is looking like if you're going for a swing perspective, and this is for more people that are busy. If you're not able to scalp all day and stuff like that, then yeah, you need to know this. But what I'm telling you, showing you here is like the basic skeleton of the market. This is how and what it does. So, okay, this has happened. And I'm not even showing you on a currency pair, I'm showing you on a dollar index. And this is how crazy it is. So if we go down to the 1-hour time frame now, again, the 1-hour and the 4-hour have the same level of structure. So it needs to be broken there. We can already see a straight 1-hour bearish candle coming in, looking like it wants to break it. Let's go to the 15-minute time frame now. Just jump all the way down, see if we can see any other levels of structure. And it's the same thing. We're not really seeing too much. On the 15-minute time frame, if you wanted to get in a better entry from there, so this is how you would not have got faked out. Well, you could have actually got faked out in this trade. Sorry, you can see what the lower time frames do now. So here you would have said, okay, it's created the, where is it? No, to be fair, the day had to close here. So now you waited for that day to close and do this move. Yeah. And what I mean by that is we'll go back over to the daily. Remember, I told you this is more advanced. You can see that on the daily, it did this and it did this. So it created a clear lower high because we have a huge directional bearish candle going all the way down here. We can see the lower high here. We can clearly see it. And we can see the next day that price action is buying up. But this is a huge candle is what I'm saying. This day, it could have easily kept buying. But once you've seen something like this, so preferably an engulfing, just some type of huge candle. But let's put it to an engulfing candle so people can understand that. Yeah. And then now we go back down to the 15-minute time frame. After that huge push, again, was it done? It's made the major structural low here. So it doesn't matter. We're looking at a 15-minute break of structure here. We're looking at a 30-minute break of structure here, more than likely. We're looking at a 1 hour break of structure, which you've seen me do. We're looking at a 4-hour level. So in the market right now, you're definitely looking at this level. If you wanted to really be on your game now, and this is why I keep saying this is for the more advanced trader, here is your next break of structure level on a 15-minute time frame. See? And then look what it's doing. If I'm lying and flying, this is why I did the zoom, so you can see it while the live market's moving, because I don't want people to say, well, John, you're cherry picking. You're cherry picking, mate. So right now it could do this. And then if it breaks this level, we can see a retest to this level. And then there you go. You can see it go here, or you can see it break through this level and then retest and keep doing something like this. It's all dependent on how powerful this move is. But right now, this is a strong move we can see. So if you did want to get in this trade for a sell or understand what another pair is doing, I think if this is selling, the others are buying. I'll go over to AU or one of them after. Just on the idea of trading, you would literally do this right now. So again, you either wait for the retest because it's a sharp move, or if the candle closes solid through this level, then you're going to get in straight away. So let's just say the candle did close on that line. Then your stop loss is above this high here because there's a bunch of orders here. For this to sell, yeah, so people can understand, for this to actually have sold, there is so many orders above this level right here. This is all of the retail traders, banks or whatever. More than likely banks and big hedges and stuff like that, because retail traders don't just, we don't move the market like this. So there's a load of orders here, big orders. And that's what they did. They went to go grab those orders, and now they reversed the market and pulled it down. So again, look at the move. There's obviously news as well coming out right now. Let's just see. Can you see news on this? No, you can't. Okay, yeah, cool. So that's what you do. So you'd have your stop loss above there, and I've already shown you where your take profit levels would be. So you can put a take profit level down here and so on. And then there's obviously, you can see that the break of structures down here, which we expect them to aim towards. And this is how you can get yourself something like a 4.8 trade. So I hope that makes sense to people. But let's just pay attention to it because we're here. Let's just see what it does. Because people want to see live things. Let's see what it does. Let's just see if it breaks it. Now you can see what's happening. Structure's being broken. I'm not lying. You can see what's happening. We just need to know when does this candle close though? 5 more minutes. Okay, so I'll go through some. Well, let's pay attention to this in the background, and I'll go through the questions whilst this happens. Let's see what happens when this candle closes. Okay, so how do you find an edge in the market? So for me to find an edge in the market, what I did is what I'm kind of explaining to you here. I've had to learn how the market moves in general, and then come into a period where I'm like, hold on a second. I'm seeing this happen time and time again. Like, so what I did is find one pinpoint to start with. So a lot of people are like, do you check this? Do you check fundamentals? Do you check volumes? Do you check they tell me so many different things. People ask me, and I'm like, when you're trying to find your edge in the market, you need to knock out all of that noise. You can't check everything. You can't, because you're just going to get confused. You need to find one thing, stick to it, and then trade it for a period of time. I would suggest you trade anything for 3 months minimum to 6 months to a year. Yeah. So when I keep telling people about Neo, this is my trading strategy, I kid you not, I've been trading this for 3 years now, and it's only been getting better and better by the little tweaks I've put to it. But it's been the same idea of trading, that the market will go to an area, it will break out, it will retest, and I'm trying to catch that continuation of that retest. And that's how I found my edge. And then what I found out is better and better things over time. One of them being what I'm showing you here, break of structures in the market. So I'm like, okay, if the market breaks structure, then it goes back and retests either the break of structure area or a key area. Hence why I said I'm playing with supply and demand areas now. Yeah. Then I'm like, hold on a second. This is basically telling you where the market's trying to go towards, and it's giving you a higher probability that this is the correct trade in terms of that. So that's what you basically do. You need to find one little thing and stick to it. I would definitely suggest you, what I'm showing you here with break of structures, you put that in play, because it's the skeleton. Like, every human being has a skeleton. This is what the skeleton of the market is. Literally, it's break of structures, higher highs, higher lows, lower highs, and lower lows. That's all the market does. It can't do anything else. So it is the skeleton of the market. Once you pay attention to that and see how it's forming, and you see how I just broke it down from the higher time frames to the lower time frames, you're going to figure out how to get in on trades and scalp. Again, you will still lose trades because they will just give you a sonic boom and they'll take you out of a trade. Sometimes it's going to happen. Like, it's just because it doesn't work 1 time, 2 times, 3 times, 5 times in a row, doesn't mean that it doesn't work for long-term consistency. It's the whole reason we have risk to reward, 1 to 4, 1 to 5s, 1 to 10s, and whatever. Yeah. So but it is the skeleton of the market. So that's how you find the edge, basically. You've got to do that. You've got to find one thing. And like I suggest, break of structures is a great way to start. And then you need to just keep adapting that to work with you. So you hear me saying, okay, now I'm doing that with supply and demand just to see if I can find something. You know what I mean? And there we go. That's kind of that thing there. So that's that question. And then I noticed on Trinity Alerts that this is how it is now, just our alert. No, we should be getting other alerts. We should be getting other alerts on there. I'll double check it though. We should be getting other alerts. If there is just our alerts come through, I'll double check that. Because that would be a mistake. There should be other alerts coming through on there. Can you explain? Okay, yeah. So when we come to imbalances, yeah, like I said, the biggest thing, this is imbalance right here, right over here. This is imbalance. So the market has done a huge candle. So most times engulfing candles, this isn't an engulfing the way it formed, but it's a huge candle. Yeah. Now when it did this candle, yeah, let me even do it like this. Let me close this and go to here so you can see. There we go. There we go. So this would have been an imbalance candle over here. Yeah. And then when it's done this, you'd easily be able to mark this up like this and this. Let's do this because this would be better. All those alerts are coming through, yo. Okay, so this would be your imbalance here, and let me just move this side here. So there you go. This is your imbalance range. So right now, what people do is people that trade imbalance in the market, they'll just wait for the market to do candles like this. And then they're going on with the idea that, hey, the candle has to cover most of this. It's like a wick. It's no different from liquidity and wicks. But what I would suggest to people is if you do want to trade stuff like imbalances, these boxes are great as well because they give you a midpoint. And the midpoint of what I'm talking about is like here. So when we go here, okay, the midpoint's down here. There. So I would say if you are going to trade a candle like this, you know, now we can see on the higher time frame, this could be going down. This is an imbalance here. This is basically gave you your sniper entry, because what they did is they did a massive move here to take out all traders. Again, remember what I told you, there's always orders above highs and lows. So everybody that's got orders here, yeah, and even their own order is here to take the sell. So they've put in a massive buy order, 5,000 lot, whatever they do, and then they've put a 10,000 lot sell to slam it down. So there's all the orders above here basically, and this is what all the banks can see. We can't see this, but all the banks can see this basically. This is everybody's orders, stop losses and whatever. Yeah, cool. They've done that, and then now as soon as they've done that, they're ready to go because they've grabbed liquidity. The market needs liquidity to move. It's grabbed it, and then as soon as it's done that, boom, now we go to this now, and there we go. So people are already in on that. So you see from the close of that candle, what you could have had is a pending order here. Yeah. Once you know how structure works, remember what I told you with the breaks of structure, once you understand the skeleton of the market better, some people would have had their order here. These are traders that have been trading most times for like 5 years and stuff, man. I don't expect no beginners to be able to trade like this. But there, you would have had a pending order here or waited for the market to come back up towards this level straight away. Boom, you're in. I caught a trade like this on USD JPY in May, and I gave it out to everyone in the group. If you go into the general chat and you check in May, I literally gave a trade out like this to people on USD JPY. It was a neo trade continuation. They tried to stop us out. Boom, I told everyone get in on the 1 hour close of the imbalance candle. And then, yeah, it just melted from there and gave like a 300 pip trade. And there you go. And this is how people trade. So this is how some people manage to get huge winning trades as well, because look at that trade, boom. And then what do they do now? Anybody that did get in this buy based on an order block or supply demand, they would have got in here because look, boom, and then it retested. They would have caught this supply demand. So you can see how many different ways there are to trade. They would have got in like this, boom, supply demand, boom. So it would have been demand zone here, caught this buy because it's a demand zone. And then anybody that did catch that, what did this imbalance candle do? Boom, took you all out. So again, what would have happened here? There was a whole bunch of orders here. This is personally why scalping is harder, what I would say, than swing trading. It's harder to just do in general as a beginner. Once you're better with it, you know, because you know when to get in, when to get out, when to have your partial profits and all this stuff. But as a beginner, it's moving so fast that it'll be harder for you. That's what I mean. I don't mean it's harder to do. I just mean as a beginner, if you don't know all of these types of little factors, it'll be harder for you to do. And yeah, you can see straight away, this is what happened. Look, boom, took it out. And that's it. That's a clean market play, market makers play. So hopefully that makes sense to you for all the imbalance traders and people asking those questions about imbalances. That is literally it there. So we saw a whole bunch of imbalances happen yesterday with the move. Yesterday was a ridiculous day, absolute ridiculous day. You were either very lucky, I'm just going to put it that way. You was either very, very lucky yesterday or just on the wrong side of it. That's it. And I've watched a lot of people say that. I will go over to GU now. I literally went for a good amount of like YouTube videos and stuff like that. And a lot of people were saying the same thing. That yesterday was just, it was something else. Let me just put this in here. Just trying to let everyone, I'll just keep putting everyone so everyone can attend if they want to. I want no one to tell me, oh, I didn't see the message. If I put that 6 times, but I put it 6 times there. I'm going to go to GU in a second. Let me just get this up. What do I want to do? This. I want to see what it's doing now so we can show. So I can show you. Here you go. So there you go. Straight away, there's your break of structure, just as I mentioned. Look, boom. So here is your possible retest. So now you're in a position where you could say to yourself, okay, I'm going to wait for it to come back to this level here. Now I'm going to get in my trade. And even if I'm scalping, I'm going to take my trade from here. So it doesn't have to, it could just keep selling when it breaks structure. So there you go. And look what it's doing. Live-O people, Live-O. So you see your breakout traders would have got in here. Remember I told you, we just didn't know where it would stop. So your breakout traders would have got in here, stop loss above this level here. Oh, GU must be doing a madness right now. I'm gonna go there and there. So let's go to GBP USD actually, because it must be doing a madness right now. There we go, it's buying. One of them. All right, cool. So let's go to the daily first. There we go. And look, these are levels. I can't make this up, people. This is what I'm drawing these levels for the VIPs every single Sunday. So this is why I tell people that, you know, you've got to pay attention and why I do the Zooms. I can't cover the ground of all of these pairs at every single time. I know people would love me to be giving out like 20 winning trades every time, but coming, I'm only one person. It's not possible for me to cover. And it's why I do the Zooms. So people can go back, you know, they can ask for the recording of the Zoom after. They can go back, they can check the charts, they can mark out the charts how they would based on what I've said. And again, look what happened. It bought up, sold down to this area, bought off of this area. These areas were marked out before prices hit this area. Remember, I've done it on Sunday, so it's showing you that this area was respected based on my technical analysis. And now we're seeing prices buying up right now. But what we do see is there's a strong resistance level here, basically. There's a very strong resistance. So price action is either going to do a huge move above this level. Right now, we can see it's holding here. Still in a bit of a nowhere land for me personally, but it has held above this level. So let's see, this is not a support. Let's get rid of this. Let me get rid of this quickly.
Hey, John.
Is someone talking?
Yeah, it's me.
Yeah. So yeah, I'm just trying to do this. So really, it's still in a bit of a nowhere land for me, GU. So I wouldn't really be in it. And your structural break. Let's get rid of this quickly. As you can see, that's there. It's here. Here's your structural break. So until it breaks this area here, it's not really considered a strong enough uptrend for me. Basically, it needs to break higher than that. Yeah, go on. Sorry, please say your question.
How do you detect the structure of the market?
I say that again. Your microphone's a bit it's a bit blurry at the moment.
I'm gonna write it down.
Okay. Okay. Anybody else, if you've got questions and stuff like that, please get ready to put them in there. I'll just wait for your question.
I just write it down.
Cool, no problem. So how do you detect the market? How do you detect the market structure? So basically, how do I detect where market structure breaks are? Is that what you mean?
Yeah.
Literally higher lows, lower highs. That's it. That's the best thing you can do. And this is why I go to the higher time frames, because it's clearer. You see it a lot clearer because there isn't loads of chop in between. You can see here that let me mark it out for you. So let's do this for you actually. So let's go here and then go to pivots. No, it's not pivots, it's fractals. There you go. And there you go. It's already marked it out. There you go. So it's not even on the setting I've told people to use, but if you go to 5 is a very good setting as well. Let's just go to 5 and see what happens.
What's the indicator name?
It's called William Fractals. It's just type fractals in the search. Basically, you can do it in there in the indicator search. But let's go back to 2 because this is the basic settings, and you can see here you go. This is why I told people to do this. That's what I said. I don't hide things from people. Do you understand? Anything that I haven't told people to use is because I'm still testing it. So there's no point me giving out something to the general public, let's just say, if I'm still testing it. Do you get what I mean? It's pointless because I'm telling you to go run something I haven't even tried myself before. Every YouTube video, which I feel people misunderstand sometimes, they might see me say, oh, look at this indicator, look at this and look at that. Sometimes I feel like maybe people think I've just picked this out of the blue and I'm just like, here, mate, here's a YouTube video. Like, no, I've literally tested these things for probably 6 months to a year and I can see that they're very viable. It's just not maybe what I want to trade. You understand? So therefore, just because it doesn't work with my style of who I am as a trader doesn't mean it can't work for someone else. And again, on that factor, it doesn't mean that I'm not going to give it to people to use because that would just be being, you know, tight, stingy, basically. Why am I hiding an indicator or hiding something people could use that I'm not using? Doesn't make no sense. So that's why you see me make videos where like, look at this indicator, look at that. You get it. What pushes you to help traders become better? It's just naturally what I do before. It's not even traders. I've done this from long before trading. People don't understand. I'm 34 years old now. So I've been doing this type of entrepreneur or helping people or trying to build, working within a team, being a manager. I've been doing this since I was 18 years old, literally from my first job. My first job put me in a position and a role to be able to do that. And I was actually a manager in a security department for it's a big hotel in central London, basically, where I was having meetings with general managers that people that are on 100K a year salaries and stuff like this. And I was doing that from when I was 18 years old. Being a ethnic minority and doing that at 18 years old, whoa, that's what I could say. Like I said, I was in that position. I wasn't aware of the position I was in. I'm not going to lie to you because, well, I was still making stupid mistakes. Obviously, I was young in it. I was in a very, very good position, basically. And being in that position and seeing how life can be very quickly and the positions people can be in is what put me in a place where I was able to just learn. So when they put me there straight away, I was already becoming like health and safety manager, standard operations procedure manager. This is what I was doing because I was excited to realize that, oh, I'm actually very well at working in a group and putting out a bunch of rules that people can follow and stuff like that. So again, like I said, I became a security manager in a department full of people that were even older than me. And I was able to do that. So now when it came into trending, I just transcended all of that type of knowledge, that behavior into trading. And this is why I'm able to teach people trading, because I'm just able to teach people things. It doesn't matter. Even music, I did the same in music, literally. I was showing people how to make music. I learned how to make music myself, record, produce, all this stuff. And then I started showing people. Videography, I did the same thing as well. Like I'm just able to do it. You go because of that. So yeah, hopefully that answers your question. It's just something I get pleasure in doing, is helping people and I'm interested in finding out things, obviously, that I like, and then I teach people. I'm going to go back to that market structure question in a bit. Sorry if I've derived from the question, but we'll get back to it, my friend. Just bear with me. What's fair value gap? I do not trade fair value gap. I could see you trade a lot of ICT. I don't trade ICT trading. So I know people are going to ask me that. SMC, ICT, I'm not going to lie to you. These are specific things that people trade. So if you want to know about all of those types of things, the best thing for you to do is to go and watch the ICT courses and videos. Some people say it's a bit hard to understand him and all of this, but he's the guy that created all of this. So it's better to go hear it from the horse's mouth than me giving you a diluted version of it. Do you get what I mean? So it's definitely good, and it's free as well. It's all on YouTube for free. So if you're very interested in those type of things, I try to not overcomplicate my trading. I say that all the time. Don't care. You're always going to win or lose, no matter if you check fair value gaps, imbalances, wicks, liquidity. Doesn't matter. If they want to stop hunt you because they are doing some fundamental craziness, it does not matter what you trade. I need everybody to understand that you are going to lose that trade. That is just that simple. Like, you cannot be any different from people trading billions of dollars in the market. So it just is what it is. So if you do want to know about that stuff like in depth, again, go over to the gentleman ICT. He's got a very in-depth course on YouTube for free that you can watch all that sort of information based on. What was I going to say? What was the next one? So yeah, those are the questions there. So if you've got any other questions other than ICT questions and SMC questions, then I can, hopefully I can answer that for you, sorry. So when we go back to market structure anyway, here, you can see straight away that this pivot point, not pivot points, this fractal point indicator is showing me where all the higher lows, lower highs are being formed as well. So the fact that this is actually showing me this, then I already know that if the market breaks this level here, then it's giving me an indication that the market's going into a better up or down trend. You'll see, so we can see here. So now if I'm using my Fibonacci level, I'm waiting for price action to come something like here. And again, this is how I would use the Trinity alerts that are coming through now. So now when Trinity gives me alert from up these levels for a continuation of a buy, there we go. So a trade that we actually missed, the only reason I never took it, but I love it because it was my strategy worked out. Again, I'll show you in a second. Definitely read, I'm trying to think, what was it? Trading in the Zone, I would say. Mark Douglas. Research everything about Mark Douglas. That will help you even with your psychology, mate. Research Mark Douglas. If you're really struggling with trading psychology, understanding trading better, research Mark Douglas. Mark Douglas is the one, is the main reason right now, yeah, why I keep telling people stop overcomplicating your trading. It's craziness to do that. You're making yourself think you know what the market's going to do, and nobody knows what the market's going to do. So once you come into there, it's a lot better. Yes, I know. Yeah, it's definitely trying. I know how to draw. Yeah, exactly. That's what I said. So Omar, going back to that question, I'm not going to go on like to say I trade it every single day. Like I said, I'm a very transparent mentor and stuff like that. I don't trade in balances and all this stuff every day. So I don't want to give you incorrect information. Do you get where I'm coming from? So the best thing for me to say is the person who created it is giving out a free course on it. So if you want to understand how it works better, it's definitely better to watch that person. And if I do understand the question, I'll completely like answer it. Do you understand? But I'm not going to talk on something because it would just make me look stupid, basically, on something like that. The Fibonacci is still not based fully on fair value gaps. Fibonacci is more based on discounts and value price. You can say, yeah, fair value in terms of gaps, but I would say it's more based on the discount rate. And I'll go over the Fibonacci in a second for you so you can understand that. Yeah, so definitely go into that. So again, when we go back into here, Trinity alerts, this is what you're looking for in your Trinity alerts. When the market breaks structure in these types of places, then you're looking at continuations from here. And this is part of the reason how I set up the Morpheus group for people, so people can understand. It's basically synced in all of the timeframes, and then was getting structure broken, so on multiple timeframes before we get confirmation that, okay, the market is now into an uptrend. When the market goes into an uptrend, now we're looking for our continuations of our buys. So we'll get loads of buy GBP USD, let's say Trinity alerts from here. And again, not all of them are going to win, but then if you take in them over a probability of time, more will win than will lose. And that's how I trade. And it's how I'm going to start trading all of my prop accounts as well. So I'm taking a lot more trades during days. So I might take 8 positions at a percentage overall of 1% loss. But again, I don't know what the market's going to do every single day. I can't tell you which one's the best entry and which one's not. It's either going to do the move or it's not. So the best thing for me to do is take probabilities, and the probabilities I'll be taking again is one thing I can control is my loss. And as long as I'm losing 1% or less a day, I'm fine on prop accounts. And I will be entering 5-6 positions based on that. Boom. So this one will buy, this one will buy, this one will buy. Obviously, once I get my Trinity alerts, I'll enter the trades basically, and I'll just let them do what they do. And I've seen that over the period of time I've traded that whole system, Trinity, that the more trades win than they lose. The only problem you're going to have is that you're not going to know which one's the perfect entry all of the time. Some will look very good, some will look great and still fail. So again, just trade the probabilities. That's what it is. So what was I going to say? Yeah, Fibonacci was the next thing. So that's when it comes to market structure. I hope you understand that. Again, I've shown you the fractal points that you can use. And then when it breaks structure, that's when you're looking for certain things. And this is why you see continuation. So if it doesn't break this level, what you're going to see a continuation of a downtrend pushing back down here. There's a huge wick left here. Remember, I just told you. So look in September. There's a V shape in September. So this is telling you on a higher time frame, weekly, monthly. You'll see straight away what I'm saying. What do we see? Huge liquidity wick. Go to a monthly time frame. What do we see? massive liquidity wick. So it can reject off this level and come back and clear this wick, just like you saw why GU had sold so much. This is what happens with look, this is a monthly liquidity grab. So everyone's thinking GU just keeps selling. What's going on? They left all of this from Corona and they've covered it now. Basically, they've fully covered any slippage left back from Corona on GBP USD. And now they've left this slippage. So they're either going to cover it straight away, go back. But if they go up, at some point, they've got to come back and cover that level. So that's that there. Now let's go to the Fibonacci. So for people to better understand the Fibonacci, and some people will know this already. If you do, great. If you don't, then work with it. The Fibonacci has a golden zone. The golden zone is more of the places where price action starts to gather orders. So you'll see like maybe order blocks are forming here, supply demand as well. All this type of stuff will be in this level. The idea, yeah, I trade probabilities all the time. And this is why I don't, let me not jump first and then I'll go back into that question. I don't like to jump, so I'm not jumping all over the place. So with the Fibonacci, yeah, we can see straight away, again, this is the golden zone. This is why I marked it out like this. The whole theory of what the Fibonacci is don't look at it like a retail trader. Look at it like a big incorporate, like you're a big business right now, big corporation, yeah? If anybody can go, it works in a corporation, and then basically they're telling you that, hey, you know, if we buy the GBP USD right now, we're getting it at a discount rate of, to make it better for you, even though it's the other way around, the way the fib is at the moment. Let's just say here's 75%, yeah, this one here. Right now, if we buy GBP USD, we're getting it at 75% off, basically. That's what this level technically is here in the market, even though it's the other way around. I know it's the way the fib is sometimes, yeah. Right now, we can see that this is 75% off if we buy GBP USD. Now, if you're a big time investor with loads of money, are you not going to want to get GBP USD at a rate of 75% off? Or are you going to try and get GBP USD over here at a rate of 25% off? What sounds better to you? 75% is a lot better than 25%. Just a lot better. Doesn't make no sense. Remember, you're a big time investor. You need to make bank on your money. You're not somebody trying to scrap change here and there and you just want a small discount. You're a big time investor using big time money. So this is basically what the Fibonacci is and why it works so well. When price action is in these key levels, basically what actually happens is their discount rates. This is what it is. So when the market goes towards these discount rates, they're more inclined to buy price off of these levels or sell price off of these levels because they're getting a better rate on what they're actually buying or selling. This is why when the market pulls back to specifically like this key level here or this one here, you can see huge moves off of there. That's why when it came back to this level, look at the huge buy you saw for there. It was worth them putting in lots of orders for a strong buy here because they were making money. Look, when it came all the way down to its lowest point down here, now they pulled it all the way up to here. All they did is they pulled back to go and bank the money. This is them banking. So they took off their buys so they can go bank most of their money. Literally, all they did is start closing positions. When they close positions, this is what happens. Sales start to happen. Then now they've closed enough positions, banked enough money. Then again, they're still getting money at a great rate. So now they've put back in some buy orders. So it's either going to continue or they'll go here and they've made it enough. They've basically got GBP USD at a good enough discount. They've managed to acquire it basically in order for them to say, here was enough. Now it can go back down, and they'll either continue to pattern down and put huge sell orders in because again, now they're getting it for 50% off if they're selling it. So do you get it? That's the whole theory of the Fibonacci. Think of it as you're going into a shop and you're getting a discount. And this is why they always tell you to sell high and buy low, because you've got to think of what the Fibonacci is doing with discount rates. Hopefully that makes sense for you. The golden zone on the fib is always this one here, the 0.618, the 0.50, the 0.382, and the 0.236. Some people only use 3 of them. Some people use 4 of them. I just use all 4 of them. But this is basically the golden zone here. And that is the key levels of where they do these moves. So you can see what happens. Whoops. So you can see what happens there. Let's go here. You can see what happens when price gets to a low, then it comes back up here. When it pulls back and you're looking at a continuation of a move, because we can see, even if you just use market structure, yeah, let's go to a lower time frame and you'll see it better from what I'm talking about. So let's say we're on a 4-hour chart now. Now, when market structure did this, what did it do here, people? Exactly what I told you before. Again, this is more of an advanced version of trading. So people need to get into the one-time VIP group and trade this continuously with me for them to understand it better. This is why I made it very affordable, because this type of stuff, you have to see it continuously. It's not something you're going to see in one day. So guys and girls, if you're holding on to that $25, don't be tight, spend it and learn. So you can see straight away, look, here was the 4-hour structural high that got formed, then it got broken. So therefore, this is how you would have known that, okay, it's broken out of a zone. Cool, that's great. You don't rush into it because this is a breakout. Again, what you're doing is you're waiting for them to offload their money in the golden zone, come back to the golden zone low right now, and then go. Sometimes they will offload their money to here and then just keep going. Sometimes they have to rush with price, but then other times they wait. So if you're trading all of the majors now, you would look on the Fibonacci to see which one's the best. The best one will always be the one that gives you the best discount. Always is going to be, because you're going to make the most money and you've got the tighter stop loss. So let's say it came here on a 4-hour chart. You've seen it's rejected once, rejected twice. Yeah. And then you can see, okay, it's rejected twice off this level. I'm going to go for it. It doesn't matter, because again, people are trying to say, how do I know this is the right trade? I keep telling you, you've got to stop doing that. So things like Trinity will help you here when you enter the market. It tells you, hey, you know, maybe on a 15-minute time frame is broken. But let's just go here. So now let's just say your stop loss was here. Yeah. So your stop loss is just below this level. So you got this is a huge stop loss. Actually, no, yeah, this is a huge stop loss. So let's just say you're going in here, it'll be below this low, is better to say. And then you're going in there, and then you're looking to take price all the way back up to this level here where they first offload money. That's a 5.91 trade. Yeah. Instead of, I'm not going to jump the question just yet. I'm going to go back to the other question. So just be patient with me, people, as this is all to teach people more. Yeah. Now you go down to your lower time frame. So you see, when you go to your lower time frame, this is how people trade price action. No indicators. Remember, I haven't shown you no indicators right now on how to trade. Remember that. The only thing, that's what I said, even like I said, Trinity is a price action alert system. It's not an indicator like that. It's price action. It shows you when the market's breaking. And again, that's why people try to use it as these signals when they first join. I'm like, bro, what are you doing? It's not. I've said it time and time again. It's telling you what I'm showing you here. So now you can see straight away, you can see how it shortens this process. Why am I going to do this every single day if Trinity can just give me an alert and tell me this is happening? Why? This is what I said, why. So you can see straight away here, look, right here, there was more market structure that broke, and what happened? Market structure broke here. So again, I've just given you the explanation of what the fib is. I've just explained to you why they've gone up to a level and why they've dumped off their money, because they need to bank their money. I've just shown you that this is a better value of price over here. I'm giving you all the explanations here. This is what I'm saying. And this is why I keep telling people you need to get into that VIP group, because this is what I do every Sunday. Yeah. I do this, but I go through all the pairs we can look for. Again, I'm not going to be right on all of the pairs, but if you're seeing this every single week, whatever way you do decide to trade in the next 6 months or a year, it's going to be better, man. Come on, guys and girls, it's just going to be better. So you can see straight away here, look what happened. Market structure had formed. They broke structure here. Cool. When they broke structure here, this is when you could have said, hey, I'm going to get in on this breakout right here. So again, look where I put the entry. So when they broke structure there, you could have got in. This is on a 1-hour time frame. They broke structure, which is a good enough time frame to say, hey, man, they broke structure. Yeah. You can even see it gave you a breakout and a retest. This is when you'll get a Trinity retest alert. So you see it broke here, then you'll get a retest because they came here. So you get a retest on this candle, or this candle, one of the three. When it gives you a retest on a pullback candle like this, it's excellent, because look at the entry you would have had here. If it gives you a retest, then you can put a tight stop loss. Your stop loss could be 10 pips, because it shouldn't, after giving you a retest like that, where it gives it to you on this candle, you would have got in on this candle here. It shouldn't go no lower than that candle's low, literally. So that's 18 pips. And now look, this is how you'll get crazy entries. But again, this is all about timing. This is a 21-hour trade. You're not going to get these every single day. This is once you get better and better and better. And sometimes you're just going to get them by luck as well. You know, but again, this is what happens. So if you're only waiting for retest alerts, yeah, you have the possibility of getting these trades, but you might have to wait longer than somebody getting the breakout trades. So, but this is what happens. So again, you can see how you would have been able to take this buy trade just based on that. Yeah, once they've gone to the fib level, your target zone's up here. You've gone all the way down to the 1-hour chart. You've seen, this is why I do multi-time frame analysis. You've seen they've broken 1-hour structure. You've got in there, yeah, on this break of structure, which would have been up here. You've put your stop loss below this level here. Yeah, cool. Now you're great. And then what you do next is you let the trade ride. And there you go. You would have been right in this trade. And then your main thing is to wait to see what they do. So your next structural high would have been here. Your next structural high would have been here. I'm going to answer these questions. Don't worry. I just don't want to go off the point. The next structural high would have been there. And look where they stopped. You see? This is how you make your take profit levels. This is why a lot of people struggle when it comes to trading as beginners. You're not going to know this in one day. This took me years to learn all of this stuff, people. You need to get into the one-time VIP group because it took me years. You're not going to learn this all in one day. I'm not saying it's hard to learn, but you're just not, man. So here's your TP levels. So you can see here's where you would have took some money if you wanted to. Could have took some more money off here. And then you definitely could have took money off here because you're even seeing a double top form here, which is telling you, hey, this is a possible rejection. 1 tap, 2 taps. See, the rest of the times when it came to these levels, you had a straight break, pull back, continuation. When it came to this one, tapped it once. You're like, okay, should I take money or not? You did. Then you're like, should I close the whole position or not? No. It came here again and failed again. Now you could be looking like saying, okay, I'm going to give this to you all fast, but it's there clear as day. You have another structure level here, break of structure in the bearish direction. You see, this is what's happening on Trinity, where you're getting a buy move, but then you might get another sell alert later on. So you have a sell area breaking here. So when it breaks this area, which it did, and retested this area, yeah, once this happened, this breakout, you need to be out of this trade more than likely, or at least taking 95–90% of profit off this trade, because now it's telling you that there's a probability of them going down. And then let's just do this. So I don't make this all junk. Let's get rid of all of this. Again, I'm going to answer all your questions in a second. Just bear with me. You can see I'm on a roll right now. Yeah. Now there's a fib within a fib. See, I can do all this stuff fast because I'm used to this now. Yeah. So if we just go here, and now there's a fib level within a fib. And what I'm saying is that now there's a swing high to a swing low. And now let me just get rid of this one for a sec. Okay, no, not this one. I'm gonna just do that. Yeah. So now you can see there's a Fibonacci within a fib on a lower time frame. And what did they do? Again, so this wasn't even it. So this was the swing low, but we need to go to the swing high here. So I'm going to just do this quickly. And then I'm going to bring this up here first to that swing over here. And then I'm going to delete this Fibonacci. Where is this one? So it's out of the way so you can see what I'm saying properly. And then what do we see here? We see the same pattern happening on a lower time frame. We've caught that based on a bigger fib, but on the lower Fibonacci, we can see what's happening. Price actions bought up, pulled back to the 50% on the lower time frame, and this is what they're doing. They're banking their money. You see what I'm saying? So it's pulled back again. So if you wanted to get a re-entry in this on a lower fib, you'd be looking at them going towards this area here or this area down here. Again, how ironic is it when you go down to that area that this is a buy zone right here? You'll see. Same thing. So this is how you would say, look, here's a buy zone right here, because we could see price action failed and broke here. Again, this is advanced trading. When you trade like this is advanced trading. This is what I teach more in the monthly, when I'm doing you see the one-on-ones? This is what I'll be teaching those one-on-one students. This is more advanced levels of trading. You can really make trading very simple. You can make it very complicated if you want to. I don't even have to complicate my trading like this. I'm just letting you understand what the market's actually doing. So there you go. This is what's happening. So let's just go here and bring all this back so we don't have too much. And now I'm going to go through the questions. What's the meaning of price action, how it works? Okay, I'm just showing you what price action is. Hopefully that answered your question on price action. So I literally just gave you a whole example of what price action is there. So hopefully that does make sense to you there. What one tool would you always be seeing on your chart? A Fibonacci. Fibonacci will always be seen on my chart, I would say. Literally. Because Fibonacci just gives me support and resistance levels instantly. It just gives it to me instantly. Like literally. So then I just know, okay, here's all the support and resistance levels. And then after that, I can start adding extra things. So like on the Sunday Zoom, I literally go through in the Fibonacci, and then I'll look at all the key zones after the breakouts, and I'll be like, price action can go to this level, this level, this level. And then, yeah, we just take it from there. It will either do the move or it won't in a week. That's what I use. Price action, again, just so you know the overall movement, price action is basically these numbers here. You're trading price moving between the numbers on the price here. That's all it is. And then understanding like candlestick patterns, basically. That's what I would say. Price action is more stuff like that. So it's more pattern based price action. So if you see a double top, that's giving you an indication that price could sell. And look at this double top. Basically, this was a perfect indication that price was going to reverse off this level. So we've had a resistance level here before. More than likely, let's just see. Okay, so here's an example of it. So when the CPI news dropped, yeah, it found a support here and bought off this level. So this was a strong level because the CPI news overall couldn't break it straight away. It had to break it later on, yeah? Then the market traded below this level. Cool. That's a level there. Now on that same level here, what do we see? We see a double top formed. And then this is exactly what you call price action. Followed by the double top is your indication, your trigger indication. So if you're not using indicators, this is an engulfing bearish candle. They're the easiest easiest candlestick pattern to figure out. When you see engulfing candles with a trade setup like what I'm explaining to you here, double top, meaning price is failing to break this area here with an engulfing candle. The higher the time frame the candle, the better. But then the bigger your stop loss would be, the higher the time frame, unfortunately. So of course people try to go down time frames when they're looking for, you know, sniper entries with a smaller stop loss. But look, you had a 1 hour engulfing here. As soon as that 1 hour engulfing appeared, yeah, trading probabilities, yeah, again, hold on, where are we? Short here. Yeah, trading probabilities, you enter. Don't be scared. Scared money don't make no money. Remember that. You know, enter. And then you go and you take your trade down to your levels. But what you would do here if you enter, obviously this is a 90 pip stop loss, so that's a lot. So if you are going to enter like that, you're going to lose at least $9 on a 0.01 on a 1 to 500 leverage account. You'd lose like $9. The lower your leverage, the less you would lose on this account, basically. So you got to understand that. This is why I tell people that you need bigger accounts, because, you know, if you lose 9 of those trades in a row, you pretty much blown your account. And this is why people blow their accounts, because they don't understand that if you don't have either low leverage on your account, or you don't have huge sums of capital and trade with smaller risk and trade probabilities, you're going to blow your account, guys and girls, over a period of time. It's just going to happen. You need to find a way to get more capital. That's why I keep telling people to go get a prop account. So now you can see here, you would have said, okay, look, I can see there's a tap here. So there was many structural levels here, many. There was one here, there's one here, another one here, another area here, another area here, another area here, some more areas here. We don't know how far they want to go. We don't know. So the only thing you can do is you put an average. So I take 1 to 4 trades. So overall, I would love for it to go here. But as it moves, if it's moving funny as it's moving, I might come out of the trade. So a reason of funny is this here. So imagine it gave me a 1.84 here, and look how far it pulled back. It almost pulled all the way back to entry before going off again. You see? So this is where you might have said, hey, I'm going to take some of my money off this table because this is moving nuts right now. You understand? Like I was in AU and EU today, and I closed partial profits because they started to pull back. I just closed the trade even. I was like, nope, they're pulling back. I don't trust them. And that's what you do. And then again, you've got all your structural levels here, pardon me, to take profit. So hopefully that makes sense to you. So that's price action. It's more about patterns and candlestick patterns. You can basically see all about patterns and price numbers. That's what it is. Another thing people use for it is whole numbers. So like they'll be using the 0 zeros. So 500, 4,000, look, see all of this. So all of these whole numbers here, this is where price can have key levels. Like, so you can see it rejected off of 500 there. It rejected off of just below it. So sometimes it won't go to it. So this is why I don't use it as a gospel, but it can go to those. When it does go to those areas, it can be key areas. As you can see here, it pretty much perfectly rejected off of 500. And then it could be other ones, which might be 0, 0. So I'm just trying to see. Nope. So this one didn't here. Let's see this one here, down here. Nope. Okay, yeah. So this one almost rejected off of 500 down here for this big buy. You can see there. So yeah, that's that. Anybody got any other questions? Anything else? Let's see here. What's the meaning of price action? Would you say you found your trading niche? I wouldn't say I've found my trading niche just yet. You know you would, because obviously you start making like crazy money. I'm still making good money from trading, but I'm not making, you know, 10,000 every month from trading. I've always been honest with people. I'm not making that, innit? Like, congrats to those people that are, congrats to those people that have made it within 3 years and stuff like that. Obviously I aim to get there, but for me, I'm able to pay my bills with what I'm getting from my trading. Do you understand? And that's what I do with my trading, basically. So I'm just very cool and calm and collective with it. And this is the whole point of why I tried to say that I'm trying to get to a point. I've had good months, don't get me wrong, but I don't have those huge months every single month. And again, I'm very transparent with that. I try and tell people that this is why you want to get more capital, because the biggest thing I've learned over a period of time is risk management is what will make you win in trading, not strategy. People will say strategy is important. I can give you a million different strategies in 1 second. I'm telling you, there's hundreds of strategy on my channel that work. There's no perfect strategy. Doesn't matter. I could teach you price action. I could teach you TDI. I could teach you 2 and 7 moving average. I can teach you Fibonacci. I could teach you supply demand. At some point, they will always have losses. But what you can control, yeah, is your risk management. And that's what will make you successful over a period of time. And I'm saying it so layman's terms for people. If the best way for you to be like as very easy in your brain like has to as possible to become long-term consistent, yeah, is if you do not have a lot of capital to trade with, as in your like real cash, like 100,000, yeah, if you don't have like 100K of real money, yeah, you need to start going into prop firm trading, because you can trade a live account. I'm not telling you can't, but don't expect to grow that live account huge. That's the problem, because that's what people try and do. They'll put 500 or 1,000 and think, yeah, within this year, I'll probably turn this to like 30K. And I'm like, I'm not going to lie to you. At any given time, we can have a week, we can have a year like what we've had this year. And I've look at the stuff we've had this year. We've had a possible World War III. We've had a energy crisis where energy prices have gone crazy through the roof. We've got inflation that's not been like this since the last recession. Yeah. We've had monkeypox. Yeah. We've had in the UK, we've had a new government takeover. Like, you cannot, regardless of all the maths you're going to go away in Forex and do, yeah, you cannot break all of that into your mathematical equation of how I'm going to become successful as a trader. It's impossible. And this is what people keep forgetting. They keep looking at the chart and strategies and thinking, yeah, I'm going to make this in 2 years and 3 years. You do not know what people are going to do on a fundamental basis on the day-to-day. It's impossible. So there's no point doing that. So what you need to do is get a lot of capital so that whenever you do trade and make small money, you're making big small money. So again, if you've got 600K worth of prop capital or your own capital, you need just big money. Then if you're making 1% to 2% a month, you're making £6,000 to £12,000 profit a month. You get it? And it's very simple. Once you realize that, you will do what I'm explaining. Trinity gives me 4 buys and 4 sells in a day on, I don't know, between 8 pairs. Yeah. I take all of them. I lose no more than 1%. Some are going to win, some are going to lose. I move on with the day. I do the same thing the next day. If the trade setups appear, I do the same thing the day after. It might only appear 3 trade setups in the week. I only take those 3. Simple. Do you get it? And that's how you you can make money like that. Just trade probabilities. And that personally, that's what I'll say is probably a great way to trade these prop accounts. Is you just got to trade probabilities, trying to find that one hit bang trade that's going to win. I'll tell you, I've tried to do it. And what happens is you end up over risking. That's what happens a lot of the time. Yeah, that's literally it. So let me see this. Would you say, finding your niche, what is the big no advice you would give to a beginner trader? It's literally what I just said there, by the way, in terms of risk management. Is the beginner thing, the biggest thing I can tell when someone's a beginner, I'm gonna say it all the time. The first thing they do is they come to me, then they say, this is what they do. Because of my one-time fee service, I've given away craziness in there, regardless of what people might think over a period of time. I'm giving away craziness. I'm giving away the potential of signals that can make you huge money. Like I said, last month, we hit a madness, especially on EJ. It was like a 500 pip trade in 1 hour. Yes, that was lucky because of fundamentals, but hey, some people would have made a lot of money in that trade. I did. I made like $300 in that trade minimum. Yeah. So now, yeah, okay, cool. There's that. Now, the next thing they're going to ask me is, just because of the signals and stuff like that, they're going to say, oh, how many signals do you give out a week? How much money can I make at the end of the month? That is the best. That is not the best. That's the first thing I can see when somebody is a beginner, because just what I explained before, you have no control over that. I have no control. I could tell you I'm expecting 5 trade setups a week, but I only get 1 because they're fundamental decisions they're making. I have no control over. So again, that's where beginners come in. So what they do is that they will start working out how many trades they think they're going to get a week. Yeah. They'll start working out how much profit they think they're going to make in the week. Yeah. And then they're going to think, I'm going to be able to make this off of a certain amount of money, which I keep telling you is pointless. For you to trade as a beginner properly and efficiently, don't do that to yourself. What the best thing for you to do, keep saying it to you. Yeah. Go and get yourself a prop firm account and trade probabilities. Once you learn, or even just do it on a demo, if you can't afford a prop firm, go and just get a demo account and trade probabilities. Say, I'm not going to lose more than 1% a day, and I'm going to take my buys and my sells. I'm going to do this for 3 months and see where my account is. Don't start taking 10 lots in this. Every trade you take has to have a stop loss and a take profit. And you've got to learn how to manage that trade whilst you're in it during the day or those trades. Simple. Whether you want to only focus on 3 pairs and do that, 2 pairs, that's up to you. You don't have to focus on 25 pairs. Focus on 1 or 2 pairs, but just do that. Say I'm only going to lose 1% a day when I do trade, maximum, and these are the trades I'm going to put in. And trade probabilities. Stop trying to trade exacts because we have no idea of what the market's going to do. So that's my best advice for a beginner, basically. Sorry. What about my Forex Funds challenges? So again, I've just gone over that. Go and get yourself a My Forex Funds account and do that. This is what I'm doing. My strategy before was to take all my Neo trades on there. Again, I can still take those Neo trades when they come in with my day trading strategy, which I've given out to everybody in the VIP servers, which is Morpheus. When there are pairs that are in a set trend, I'm only taking Trinity alerts on those pairs on these proper accounts now. That's my day trading strategy. So again, I'll only lose 1% and I can take up to 8 trades if they appear. Simple. If that's literally it. And I'm either going to have a good day or I'm going to have a bad day. But what I've noticed is on average, you're not going to get 5 bad days in a row. You'll probably get 3 good days or 2 good days, sorry, where all of them hit 1 to 4, whatever, in terms of profit, which the rest of the weekdays, you're losing less, basically. So when I've got bad days, I'm losing maybe 2%, yeah? But then once I've won throughout the week, I've made 4%. So at the end of the week, I could bank by 2%. I might make more on those winning days because they might do a huge move. I could win 4%, sorry, 6%. So then I might have lost 2% in the week, but I've made 4%. So in that week, I'm still profiting 4%. You get it? Or 3.5%. And if I do that over a period of 2 to 3 weeks, hey, guess what? I've passed phase 1. Do it again. Hey, guess what? I've passed phase 2. And this is my whole new trading strategy at the moment for Forex Funds account. So yeah, definitely get one of them anyway. When you enter a trade, do you wait for it to play out? Either stop loss? No, I would say you can do that, but man, these markets are crazy. Like, I get there's the whole idea of set and forget, but boy, set and forget, you can't set and forget nothing when man like KK in the government was telling you about mini budgets and then reversing mini budgets 2 hours later. Like, the markets right now are so unstable. People have to understand it. We're trading some of the, for this year minimum, like we're trading the hardest markets you can ever imagine. I've just explained to you all the things that's going on. So if you've got a set and forget mentality, you're more than likely going to lose a lot of trades because fundamentals will just kill you this year. I can't lie to you. They'll just blow your account. They'll blow the life out of your account. You just don't understand. Look what they did yesterday. Look at that. That was crazy. They sold price on loads of pairs. Look, let's go to anything. Look what they did yesterday. Let's go to, this was the pair that I was trying to trade, euro. And I even gave this one out as a signal. So imagine, I've given this out. I said, look, they did it again today. Look, this is crazy. You can't trade this. This is what I'm trying to tell people. So when you're losing trades, don't even be a vex. So we've looked for a sell from this level here. The reason why I've looked for a sell from this level here is very viable. I caught this sell from last week. I can't remember if I gave this out, but I did catch this sell. I'm pretty sure, I think I did give this one out. So I caught this sell from last week. You can see it came all the way down to here. So this was a great sell. This is signal trade here, boom. Yeah, I told everyone this is what we're looking at. You can see why I've got this massive thing. Again, I'm not lying to you. You can see my fib is on the chart. It's all there, people, for you to see. Yeah, caught this sell from here, boom, it's come down. Yeah, great. Now I've tried to get a re-entry for this sell because, of course, price action has pulled back to a level. So if I was to draw another fib, this was the 78.6 basically. So it's a great target to look for a re-entry for a sell. Now what they've done here, so let me zoom in. It was this area here we was looking for a re-entry of our sell. But what they've done here is they did sell price action. Look, they pulled it down. Yeah, so it's starting to go. You can even see here on this daily fib that I've drawn, it was rejecting. Look, it was rejecting. Nice, simple. We can even see here, this is how bad it was. It even broke structure. This is why I said you're just going to lose trade sometimes. Here was 1 hour structure. They broke 1 hour structure. They broke 1 hour structure. Even with this liquidity left here, wick on the 1 hour time frame minimum, they still said, hey, we don't care about your structure. Fundamental, those 13 euro news events before this, I remember, and I was telling my brother at the time, I was like, well, bro, there's a lot of news events. He was like, hey, man, they're low impact. I was like, this looks a bit crazy. There's 13 events, but how mad it was even before the news. This is why I tell you, we don't control this. And Mark Douglas explains this to us, guys. And this is why I say, go and watch Mark Douglas, go and read Mark Douglas books. He said at any given time you're trading, regardless of your strategy, somebody with more money than you can put in a huge order in the opposite direction. And this is exactly what happened here. So here's what happened here. As soon as this happened, boom, you can see straight away. Price actions bought all the way up. They've done a manipulation. This is not even news. It's not even news, people. There's no news event at this time. Then what's happened with the news after, they've brought it back down after. This is with the CPI news that was getting released. They smashed it down. So it was a very viable trade because this trade dropped, just to show you, this trade dropped 117 pips. And my trade entry from here was literally about 100, it was just a bit more, it was about 140 pips. So we would have got 117 pips. So they did that with the news event. And then after, what the hell is this, people? Then they brought it up 130 pips. Then just for them to go to this high today, to sell it down another 80 pips, to buy it back up. You can't make this up, guys and girls. You can't. Like, you can't trade markets like this successfully constantly. I don't care what anybody says. This is just far too inconsistent with fundamental treachery. That's the best way to put it. So yeah, that's just what happens sometimes. So regardless of what I tell you, this can always happen. And this is why beginners lose a lot as well. They don't realize. It's the main reason why I say you've got to trade probabilities. Even with all of this happening, I was down 2% on an account this week, and now I'm back up by 0.25% on the account, just because I traded my probabilities and eventually I paid out. The ones I flopped on is I came out of my GBP trades. Those would have got me like 5% on the, on the Morpheus trading ideas of strategy. They would have got me 5%. I'm telling you, I couldn't believe my eyes. But yeah, let me go here. So yes, you can pass based on this, but there is no guarantees of that, people. Remember that. So you can pass your MyForex funds account based on the strategies that I give out. So whether it be the Neo trading strategy that I explain every Sunday, like this is what we're looking for, yeah, or whether it's the Morpheus. Morpheus is basically so I don't have to keep trying to give you trades every single day. There is X amount of trades that's in a trend. Yeah, let me show you so you can get it on a sheet here. Yeah. No problem showing you because the sheet changes every couple of days. I need to even change one here. So now you can see, so this is what the traders get. They're going to get a sheet. So you basically, when you join up the one-time VIP, you get access to, I take your Gmail and you get access to this sheet, yeah? When you get access to the sheet, what actually happens is that as I update it, so I might update this every 3 days, every 4 days, it depends what the market does. If the market don't break structure and give me the trends that it needs to give me, then it's not going to update. So when it does update, I'll put them in here. These are based on long-term trends, yeah? So, you know, on AED-CAD, you should only be looking for sells. You're going to only get the Telegram Trinity alerts based on sells in the Telegram Trinity Morpheus group. You're only going to get AED-CAD. It will give you buy and sell alerts, but you know that the Excel sheet tells you only look for sells, basically. So every time it says a sell alert, you can take the trade, basically. And what I tell people is what I'm doing specifically is I'm not only taking the Trinity Morpheus, I'm taking the 15-minute alerts as well. But what I'm doing is that if it gives me an alert, yeah, let's just say it gives me an alert here for EJ is one of them for the sell. Yeah. I'm taking the tight entries because risk management is what you need to trade. Nothing is a simple one plug play system. People, especially beginners, they need to stop thinking that. It doesn't exist in Forex. It just doesn't. There is no plug and play. Everything's going to be different each time. So when Trinity gives me an alert, especially 15-minute, 30-minute, doesn't matter what time frame, I'm looking for an alert where the stop loss, yeah, is small. If the stop loss is small and reasonable, look, 30 pips, I can deal with that. If this gave me a 15-minute alert from here, this is where people mess up and they'll still be like, oh, it doesn't work, John, it doesn't work. No, because you're not trading sensible. I can't control sensible trading. They will take the entry from down here. This is where some beginners would do. Yeah. And doing that doesn't make sense now because now you've got a stop loss on a 15-minute entry of 80 pips. Who wants that? That's a yucky trade. Who wants that? Well, you can just patiently wait and it will give you a stop loss at some point when they respect structure enough of like 15 or 20 pips. Even if you're not trading Trinity, you're not listening to whatever I'm saying, even if you're just paying attention to break of structures in the market, guys and girls, look at good risk management. You want to be in trades that have a tighter stop loss and a bigger risk to reward, because therefore, even if you're losing money, even if you don't over risk, even if you're losing money, you're losing less money. So when you do get, if the trade does win, you're making more money. You get it? So that's what you want to do. So yes, you can pass MyForex funds, accounts and stuff like that. But me, I'm only taking these setups with, again, these trend trades, you see? So every single day when I get a Trinity alert, 15-minute, 30-minute, whatever, yeah, I'm doing 15 so I can get even tighter stop loss. And everybody has these 15-minute alerts as well. Some of them just can't be bothered to filter through the Trinity alerts that pop up because there's a lot of alerts. Again, there is no plug and play Forex. I'm sorry. There's just no plug and play Forex. You just deal with what you have to deal with. I will personally go and check which ones give me the tightest stop losses. I'm very transparent here. Whichever gives me the tightest stop losses, those are the ones. So something I can clearly see is giving me like a 25 pip stop loss, 30 pip stop loss, I can deal with. I will only take those based on these trades. Again, they will still lose. But what happens, guys and girls, I'm losing less money. So if I have a bad day where everything loses, I might only lose 0.5% on all my trades. You get it? And if I lose 0.5%, then I'm still good. And what happens a lot of the times, I don't lose every trade. I might lose 4 trades, win 5 trades. I might lose 5 trades, win 3 trades. You get what I'm saying? And this is what happens. So this is where you don't even lose 1% in a day. So when you do get the winning day, you win. How many percent would you win? You win like 4 to, is it 4 to 8? 100, 50, 50, 50. You end up winning, so 50 times 8. Yeah, you'd end up winning about 2% basically. I believe it is. Yeah, 2%. 50, 50, 50 times 8. Yeah, I believe it's about 2%. And then if I have more, I can end up making like 4% on the day, depending on how aggressive the move is. So if they move like 2 times what I expect or 1.5, I can make 3%. That's what I'm saying in one day on these accounts. You see what I'm saying? So if you do that over a period of, listen to what I'm saying in the maths. I know it might be a bit jumbled and I apologize for that, but if I'm able to do that over a period of 3 to 4 weeks, remember, I'm telling you, I'm making 3% in a day at some point trading probabilities. Yeah. Yes, there's losses, but at the end of the week, hear me, if I'm able to be profitable by 2 to 3%, then I'm good. What the whole idea of what happens is that when I'm profitable by 2 to 3% at the end of the week, at the end of the whole challenge, if it's the last week, I do something called a Hail Mary. The Hail Mary means, hey, hold on a second. Like it's either, there's no point me just looking at this profit in this account in the face because I'm not going to spend it. It's not my money. It's demo money at the moment. Basically, what I do is now when these trade setups that I'm telling you comes through in that last week, I will use more risk, you see, because I need to push. I need to push basically. So if I do win, I can push myself forward in that last week if I haven't passed the phase by the last week of the 30-day timer. I hope that makes sense to everybody. What phase? Every day. Yes, it's every day. You will either lose 1% or you'll make 2 to 4%, literally. Every other day, that's what can happen. You will either lose, so you could lose 1% for 3 days in a row. Make sure you understand that. Do you get it? And then you might win. It's all depending on the market. Like this week, you would have probably, no, you would have made a killing. I can't lie to you because the GBPs were one. I got scared. The week was so crazy. I came out. I was shook and I came out. I'll tell you in a second. What is the phase requirements to surpass? So on my Forex funds, you need 8% for phase 1 on the evaluation. Then you need 5% on phase 2 and you get 60 days. Phase 1, you get 30 days, 8%. Phase 2, you get 5% and you get 60 days. So you get longer period of time to trade your probabilities. So it's 8% first, then 5% after. And then FTMO is 10% first phase, and I believe 5% second phase. My Forex funds does exactly what FTMO does, and it's cheaper. So I always tell people you might as well go with my Forex funds. And plus, you can trade the news, hold trades overnight, everything. So I'm not going to lie to you. FTMO is a great company, but you're probably just better off just going for my Forex funds at the beginning because they pay you. They've paid me many times. Like you might as well. It's like I can support. You can definitely pass it. Everyone can, but I'm not going to lie to you. Trading 8% in 30 days is not something people do every day. It's just not. It's not proper trading. Big traders don't make 8% a month. They don't do that. So what they're asking for is, personally, and I'm not gonna feel ashamed to say it, I feel like it's technically unrealistic for you to have the idea, or anybody, that you're gonna pass every single month. You're just not, people, because again, big, huge traders don't make 8% a month. That's crazy. Imagine people making 8% on $100 billion. Like, come on, let's be real, people. People don't do that. You understand? So the fact that they're even making us make 8% is a bit tight. And, hopefully one day I can have an interview with them. And I would say that in there. I feel like the 8% is a bit crazy, right? It's a bit crazy because it's a lot of money. Imagine making 8% on 1 billion every single month. Do the calculations and understand how much money that is. So people don't do that. So you just got to go for it. Obviously, once you pass, when I pass, I lower my risk completely, basically. So I do not trade for, because I've made 8%. When I get the live accounts, I do not, hear me, people, I do not trade the same way I trade my phases when I get the live account. That's just crazy. It's pointless. You understand? You'll blow the account more than likely over a period of time. You need to bring it completely down. So my main aim in my mind is that I'm only trying to make 1% a week, yeah, on my live accounts. That's how much my risk goes. Same account size, but that's how much risk I bring back. 1% a week is 4% a month. If you're making 4% a month when you get a 600K account, that's 24K a month. Need I say any more? Hopefully that makes sense to you all. Hopefully it makes sense. Yeah. Hopefully it makes sense to you. Yeah, I'm glad I didn't even bother trading today. This is an untradeable market, bro. I was actually in this pair, but yeah, this one is still going down. So I was right. Just very choppy. Good, I was right though. It's probably going to clear all of this. I was actually right though. It came out. This was another, again, probabilities. I had a 15-minute alert that appeared here, Trinity. Again, this is in a daily downtrend, a weekly downtrend, monthly downtrend. It's in a downtrend. This is in a huge, this is just in the downtrend on every time frame. That's why I definitely took this trade. This is in everything. You can see if we go into the monthly, this is in a downtrend. So I just took it. I was like, hey, this is probably going back down. So I took it. Yeah, we can see that for now. So yeah, it came through. It's just perfect. And then yeah, selling. It was great. Yeah, people just need to join it. Like I said, it's a cheap price and it's definitely going up. I'm not gonna keep it there forever at that price. The one-time fee is definitely gonna go up. It's probably gonna go up to like a maximum of £100 at some point, because again, it's a one-time fee. Let's see what people are eating today. The Blaze is eating again. He ate off of it as well. Yeah, ate off of that as well, man. Nice. Blaze. Blaze has been with me for long. People need to understand. It's good for me to even show you this. I don't know if he's in here, but he's one of the gentlemen that's been with me for long. He's been with me for like a year now. Look what he's doing. Like, this is why I'm telling people, you can't join a mentorship no matter who you join, and you can't expect to be profitable in 1 week, 2 weeks. This guy's been with me for a year, more than a year now. Look at him. Look at the entries. You understand? Yes, he doesn't win every trade, but when he wins trades, look at the entries. Look. Because he understands what I broke down. Yeah, no problem, mate. You can join up then. Look, trust me. He's been with me for long. Look at him. He's been making constant, because he's aware. This is me being transparent. Yeah. I'll show you. Look, see here, he caught another one here. See, so look at this one, boom. Because he knows what he's looking for now, because I've explained what I'm explaining to you guys and girls in this Zoom multiple times. And again, the funny thing out of all of this is that I'll do a Zoom like this, and I'm telling you, the amount of people that watch it compared. Look, Blaze is constantly. Like, yes, he's losing trades as well. Don't just think he's winning trades all day. Nobody's just winning trades all day. But at the end of the day, he's still found some type of level of consistency because of everything I've taught him, plus what he's learned. I'm not just going to go on like I taught him everything, you know. Okay, you can just see them here. Again, long-term students. So this is why I made everything a one-time fee, just so people understand. Yeah, so yeah. So literally, that's what people, I made everything a one-time fee so people can understand. Because when I made it a monthly subscription, every single person was basically trying to catch the monthly money in what I was giving out. And if I give out bad trades, it's, oh, I can't stay because, you know, I made no money. And I'm just like, I can't guarantee you we're going to get good trades this month for signals. I can't, sorry, I can't do that. Like, this is impossible. So we just got to take what we do. And that's all I do. I just take every month as it comes. Every month as it comes. And then sometimes I have a bad month. And then I have much more good months than I have bad months. But there's going to be times you have a bad month. This was probably the longest period I've had ups and downs since a while now. I've probably had about a month and a half, if we add up 2-month period, of just weird trades hitting stop losses, trades not going all the way and everything. But yeah, sorry, the last trades I want to say that did help me. I came out, man. Yeah, I would have had to hold this. I hate holding trades all day now, though, man. It's just this news right now is just too unpredictable. But I was right, though. I'm glad I was right. That's the main thing. Yeah, I was right in this one as well. Okay, I've seen something. And this is what I do, by the way, just for everyone that's still here. I specifically took AU and EU today because I wanted to see something. And I believe I've cottoned onto something else as well. I'm like, okay. And in time, these are things I will teach people, but I have to test it for 3 months to 6 months to a year most times, because if it doesn't do that or it changes, then what's the point of me teaching it to you this week and it doesn't work? No problem. So yeah, these are my trades. No, going. This is the one, by the way. So this is the one on this system here. GBP, JP. Yeah, this gave me 2 entries. That's how bad it was. And this was actually a Neo trade setup. This one here. This was actually a very clean Neo trade setup. So I'll show you. So the only reason I didn't take this is because we had this, but look, see, this is exactly what I explained. You see, this is all just so people can see proof of this. The reason why I've got these markups on these charts is because of what I trade, the Neo trading strategy, and it's all based on literally catching your breakouts on the daily time frame and your re-entries on there. We've had literally a massive, huge breakout. So it's the daily, weekly, monthly time frame. Let me not confuse it for people. Daily, weekly, monthly time frame. We need to see a breakout. Yeah, we start from the daily, and then if we see the breakout there, then we catch the retest. This is where people struggle because, you know, they want the perfect entry. We don't get perfect entry sometimes. And then they came back into the level I drew out here, exactly what I said at the beginning of the Zoom. I do not cap. It's all there. Look, rejection, 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 rejection. Breakout, retest back into that same rejection, rejection, rejection level, continuation. I understand people will be like, yeah, let me try this. Let me try this. You need to join the VIP service. If you're watching this Zoom to the end, I'm going to keep saying it to you because I need to be able to show you different ways this can form. There's no point me just showing you this and you think you're going to catch a million of them. Trust me, you need to see it continuously. It's why I call it the circle of pips. And look, came to this area, boom, Neo trade, 500, 600 pip trade. There you go. The problem they've been doing with the Neo trades lately, part of the reason why I'm trading day trading strategies, anyone that's still here at the end, is because they keep doing weird things before it. And look at this. This is weird, man. It's too, what the hell is this? So usually it would be a nice, clean setup down the bottom here, breakout, retest, continuation. They keep doing these weird things beforehand. No problem, man. No problem. So yeah, that's kind of just really it. So they keep doing that, and you can see straight away this was a trade setup there, guys and girls. So yeah, I'll leave it there anyway because I can see people are going off now. It has been a long time, you know. As the person asked in here, why do you do this stuff and teach people? You can obviously see I am passionate about it. So anybody that has stayed to the end, thank you very much. Again, join the services. Don't be scared. Prices are going up soon. And yeah, I'm just giving out this every day. I'm always going to say you're not going to win every trade, but I am definitely going to teach you some things that will make you much more of a better trader than probably when you came into the VIP in the first place. So yeah, with all that being said, everybody have a nice day. I love you all. Peace.